Okay, welcome in, you trader nerds, you silly kiddos. It is the fourth day of May. May the 4th be with you. And we are down 0.78%, although it looks very, very controlled, doesn't it? Look at this. It just looks like an inside day. It doesn't look like much at all. Now, amazingly, I don't know how many times we go to the Big Green Monster. And the Big Green Monster is just amazing. You would have sworn that I drew this morning, right? I mean, look at this, y'all. Pop, 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 pop. I mean, I don't know how can anything work? I mean, it just shows you where there's a little support and resistance and all that kind of stuff is. Now, maybe it just happens ever so often, but this thing is crazy. I don't know how it works. But you saw that it kind of tagged down here. This is oversold for the fair value zone above it. So if price oversold, we would anticipate filling this gap, filling these gaps and coming back into here. So now, again, it could go lower, but we at least know where there is some support down here at our 100% line. How does this work? I have no idea, but it does time and time and time again. It just does. It just is an amazing technical analyzer that you and I use. So who cares what the market's doing? We don't give a flying flip. But it is fun to speculate and to hyperbolate and to pontificate and all of the concates. All right. So while we're concating, we are at 36,599. 36,599. We expect we're probably down a little bit today. 36,599. We are down 36,599. All right, so down $342 from yesterday. Okay, let's see how our Greekies and ratios are. We are 50 deltas and 57 zetas. 50, 58. 50, 58. Goodness, 50. Getting a little long in the tooth, ain't we? 58. Now, I talked to Ed about this morning. I think y'all going to like what it is. Look at this, y'all. VIX has popped back up to 20. That's why we're losing, right? It's not really a market move that's hurting us, but it certainly is the 11,688. 11,688. VIX moves back up to 20 now. So we're, look at this, y'all. Oh, my gosh. What a pristine little account that we have here. But I was talking to Ed, and I said, Ed, here's what you need to do. So the market's going against you today. We've lost a little bit, but that has crunched our theta up a little bit, right? And I started saying, there is nothing wrong with going into your positions and going, maybe you close something that's profitable, right? So that if it were to continue down and we had big movements, that big movements don't take you out. I mean, look at this one. We've got a 90% profit on a short put here. Now, let me make sure that there's nothing 3760. Oh, well, that's a put debit spread. 3760, 3710. That's a put debit spread. 3725, 3775. That's a put debit spread. Then you go 3760, 3710, 3780, 3830. That's a put debit spread. So then you go 3860, 3810. That's a put debit spread. So those all in the 15 days are put debit spreads. But then you could start looking and go, well, what about this at the 43 here? This one is down. That one is up. You see what I'm saying? In other words, you could literally go before crap hit the fan. It's harder in this account because I don't monitor my trades, right? So I'm just going to say everything's fine in this one. Okay, we're green here, and green here. But I think I will show you in the other account. So let's go to the IRA account, and let's see how bad we're taking a hit over here. We are at 83,820. 83,820. So we're taking a little bit of a hit. 83,820. Boy, that's a big hit. 83,820. So that one's down $856 on the day. Wow, rough. Let's go over here. And our Greeks and ratios are, should be easier to show you over here what I was thinking about doing. So we got 144 deltas, minus 2 is 142. minus 20 is 122, minus 6 is 114. Is that right? 114 and 140 theta. 114, 140. Let's put that in. 114, 140. 114, 140. Yeah, here it's easier to see, right? So we're at 20 on the VIX, and our buying power usage has blossomed to 29,880. Look at that, 29,880. Wrong account. I would say 29. Is this the right account? No. Tasty trade. 29,880. Okay, 29,880. So we're a little red here. We are in the middle of where we could be between 0.1 and 0.30 and 114 here. Our deltas need no adjustment, but here's what I was going to show you. What's this? Here's where the art of trading lies, right? You sit here and you go, we're down, $671 or so today. You put these in their little categories, move to my T-bills. By the way, did y'all forget to buy T-bills this week? I went and bought mine yesterday. Buy your T-bills. So let's go to our nakeds, right? See, here's what I was saying that we could do. What's this, y'all? Our naked puts, we've got these that are at 88% profit. Why not peel that off today? Right? Why is there a reason to let that go on? We're losing $8 on it today. So let's close the 34.10s. Take risk off. So we don't want risk to kick us in the face. We want to get out of stuff. 34.10s at $1.45. So let's go put that in. 34.10s at $1.45. 34.10s, here's 4 of them at $1.45. That is prudent, y'all. Take off. Don't let the market take us out. 5, 4, 23. Here we go. So we made an 85% profit on that. Okay. Let's go else and see what else we got. Take risk off. Go back here. Let's look at our nakeds. Okay, so we got another 15-day one here that's at 88%, the 34.30s. Okay, wham, we lost $8 on it today. Wham, we should have closed it yesterday. Wham. So let's go try $1.50 on those. 34.30s at $1.50. No takers. No takers. There we go. $1.55, baby, is out. 34.30s. There's 4 of them at $1.55. So we made, load up the fan, honey. 5, 4, 23. We made $204 and $207. How does daddy continually do it? I'm a stud. That's one. All right. So we dropped those 4. Let's go see what else we got. Market starts moving against you, take stuff off. You're always going to be able to find, excuse me, something that's profitable. I can get me some more cough drops. Look here, 87%, y'all. We lost $6.75 on it today. Wham. Close it. Closing the 34.40s. Closing the 34.40s for $1.60. There we go. 34.40s, $1.60. Let's get those off the books. 34.40. There it is. $1.60. 5, 4, 23. Beautiful. Made another 100 and something, almost $200 there. How much we make on that? Just ringing the registry out, 154. All right, we still got some stuff in the 15-day cycle. I say take risk off. Let's keep on. Then we'll show you what our metrics look like. I don't want to take too much off. Let's see. Let's go ahead and look right now. I doubt I've taken enough off yet. But this is the great thing. In our strategy, most of the time we're going to be able to have, so our delta, our theta is down to 124. Let's see how we've done. Getting risk off the table. 124. Oh, yeah. Look at us, 124. So we've got that down to 0.15. Let's go keep and doing a little pruning. There we go. We got some more we can prune. Ringing the register. Let's take these three off. Add $1.60. 34.40, $1.60. 34.40, $1.60. Come on, get me out. We'll go up to $1.65. Oh, we got to go to the $1.60. Praise the Lord. Thank you, Jesus. Hallelujah. Some of y'all didn't grow up Pentecostal like I did. We always say hallelujah. I remember Mavis Willingham pulling me down to the altar, and I thought, Lord, girl, get off of me. She had them crazy eyes. She pulled you down and says, get in that altar, young man. And I thought, oh. So we got out of there at $1.60. You know, she was just trying her best. She didn't know that she was frightening. Had that bun of hair. You know, the Church of God buns. You know what I'm talking about. For those of y'all who might have grown up in Church of God. Hallelujah. All right, so we're out of that. So why don't we get out of these two, right? We got 15 days left in those, the 34.70s. See how we're looking over there. And in other words, we're just getting out of profitable stuff, y'all. We don't want things that are profitable to possibly go unprofitable. So let's get out of these 34.70s. So we're down $5.50 on them, but look, we got $107. That's enough to feed the family at Applebee's. So let's go. Let's try $1.80, 34.70s. Oh yeah, $1.80. Get out of man. 34.70, $1.80. And Mavis Willingham, she paid the piano too, boy. And she had them wild, crazy eyes. I'm like, oh, have mercy. Mavis Willingham. I ain't talking about her in a long time. All right, so there we go. We got that out. Now, remember that I'm also thinking on my back test scenario that, you know, I'm also ready to pull off 28 days as well. So let's see what our new theta number is. See if we've done enough pruning of the trees. And all you do is take a risk off. Right? Take risk off. So our theta now number is down to 115. Let's go check that out. 115. How does that look? Oh, yeah, we pruned it all the way to down 0.14. All right, so now you got to ask yourself, and we brought our risk down to 23,561. Let's see what that looks like. 23,5. Oh, look at Bobby. Look at Bobby. How does Daddy do it? Look at that. You know, and then you kind of go, have I done enough? Is that enough pruning? Am I taking off enough risk? So as much as we try to make this a science, you know, the science it's the mechanics and the mechanics. It's also a little bit of art. And you've got to ask yourself, am I comfortable with the risk where it's at? Because all I'm really required to do, my manifesto requires me to keep 0.1 theta. I'm at 0.14. I mean, am I comfortable? You know, we've got all this about, you know, Putin saying they may nuke, you know, Ukraine, and we got all this garbage going on, and we got more bank failures, and, you know, it could get ugly. So you got to ask yourself, are you comfortable right here where this risk is? And if you're not, you can certainly keep pruning, right? I could go back over here, and I could start pruning some of those 27-day options, right? Look, it's up 80%. I mean, my God, it's down $14 today. I'm just going to take one of those off, and then I'm going to be done. And I just want to show you what it feels like. 33.10s, 33.10s at 240. 10s at 240. 33.10, right? That was what it was? No. Yeah, 33.10 at 240. $4.23. Boy, we're doing a lot of trading today. I thought we wouldn't do hardly anything, but I think this is good. And I just want you to understand, y'all. Let's pretend that this is the beginning of the COVID crash. Because that's what we've been thinking about, right? Oh, no, we've got bad news today. Oh, the market's down just a little bit today. Oh, they're talking about COVID. Oh, may shut stuff down. Okay, well, the market goes down a little bit and it goes against you, and you go, you can either be stubborn and say, I'm going to leave risk on. I don't even care about COVID. Or you can be proactive, because remember, your mandate is to keep your theta at 0.14, at 0.1. I'm at 0.14. Is there stuff you could take off to get that down? Absolutely. And that's what we've done today. Now, you don't have to go all the way down, but I could keep on pruning, y'all. I mean, I could literally just keep on pruning and bring things down. But I think I'm good enough now. We closed 4, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. We closed 20 naked positions, y'all. 20 naked puts gone. And all were closed for a profit. Do you see how it works? I mean, it's seldom that you're going to get the 20% down move in a day. Now, it could happen, but most of the time, these things kind of meander down like this. So now we're at 100, 106, 100, 106. See how our metrics are. We're just being proactive. 100, 106. Look at that, y'all. I'm at 0.13. And now we're using 22, 349. Boom. You see how that works? Just being proactive. So I want y'all to be proactive in your accounts, okay? Hey, Charles, put one position on today, tomorrow, et cetera. I wouldn't enter a bunch of new positions based on removing highly profitable ones. Yeah, and Ken, I can imagine that's Ken. It says Yoda, but that sounds like something Ken would say. Oh, that's Ed. Ed, you're Yoda today. Oh, good, Ed. Yeah, I don't even think I'm going to put a position on today. You know? I mean, I think I'm just fine where I'm at. I mean, my theta's fine. I don't think I put on more risk. Now, I guess I could keep taking off some of these 28-day ones, right? I could take off some of these 28-day ones. Got a couple nakeds here, and maybe roll one out to a new thing. You could do that, but I think I'm comfortable with the risk. What would y'all do? Anybody got a different technique? I just want y'all to see that most of the time, yeah, stay light, sell calls. There you go, Brett. I just want you to know most of the time, if the market were to be working against us, we've got plenty of time to do stuff. Now, if I close enough and my theta gets too low, what do? I can put on more positions. But your mandate, if we had to mandate one thing, it's to keep this at 0.1. I didn't do a good job those 3 days. Now I got it back in line, right? It could be said, Bobby, you may be taking a little bit too much risk here. Okay. But I feel like I'm good in this VIX environment, right? I'm less than half of where I could be on my theta. My deltas are fine. Just take it off. Most of the time, your trading plan, you will be able to take off a winning position. Look at that. Where's it at? Yeah. If any of the Greeks and trade metrics are violated, permission is granted to, first thing I can do, close profitable positions. And most of the time, we're going to have profitable positions, way in excess of 50% profit. So lots of good things that you can do in a portfolio to keep your risk in check. All right, so let's go to the final account. I think I'm good there. I don't think I'm going to worry about it anymore for the day. Let's go over here. And this account is at 34,955. 34,955. 34,955. Okay, wang. We're down a little bit. Down $459. That's a pretty big pickle that we're down. Let's look at our Greeks and ratios over here. We are at 78 minus 10 is 68, 68. Uh-oh, we got a 1 for 1. 68, 68. Now, VIX is 20, and our buying power is 11,170 minus, I can't do this. Let's see. 11,190 minus that. So it's about 11,000, right? $11,000. Okay. So we look good, except we're a little too long. Well, chances are we can take care of that too, right? We go over here. Let's look at our open positions. Hey, wait a minute. Oh, that's a debit spread. So puts PDS debit spread naked. So I don't have anything, ladies and gentlemen, in the 28 day or the 14 day or 21 days to take off, right? They're all this. All right, SK says, I like doing nothing. If position gets the 2x loss of the initial credit, I close it. Wait for the next date when I'm supposed to open a new one and then open it. Every time I try to adjust with the metrics, I recover much slower than if I would just sat on my hands. And most of the time, SK, that is exactly right. There's no need to do anything, especially with losing position. Let's go over here and let's see if we got any winners over here that I could pair off. I am not closing anything that's a losing position. I can tell you, we will sit on our hands. So these are T-bills that I bought, thanks to Ed, our T-bill guru. And so our naked puts here. Let's see. Okay. You know, if you wanted to take this one off, you know, you make $45 on it. Hold on a second. I think I will. 35.80. Just want to prune off a little something. Move it up. Okay, so we close that at 14.75. 35.80 right here. 14.75. Hey, mama, we made $40.81. Yes, thank you, Jesus. Yes, amen. All right, so we got rid of that one. So, yeah, so that got rid of some theta, right? And that got rid of some deltas. Let's see what else we got. We'll close maybe one more. I just want to take a little risk off. And the reason is I was talking to Ed about this, and I was just like, Ed, this is a prudent thing to do. You don't let the market work against you. 3,600's off for 15.75. 3,600s for, oh crap, 3,600s. When I close, 3,600s for 15.75. 3,600, 15.75. And they say, Bobby, you're taking away your income producer. Okay, but keep in mind, y'all, I just need enough theta. Well, your theta is going to be low if the market goes back up and recovers. I got it. I got it. So now let's see what we've done with our Greeks. We took a couple of those off. Probably all I'm going to do here. All right, let's go over here. And let's say that we're now 69 minus 10 is 59. 59, city one. 59, city one. 59. Oh, yeah, look at that. 59, that's much better. 59, city one. See? I need more theta to have to sell premium. Best time is high VIX. Yeah, and if you need more theta, today's your day. I mean, yeah, today's your day, right? Now, my thing is, it's not my day. It's not my day to sell more premium. I got enough. This is saying, hey, Bob, you got a little too much, actually. You're running a little hot, dude. Slow your little roll, Bob. Slow your little roll. Now, I know that this 0.17 is going to go down to 0.12 and probably lower now that I've closed a couple positions. But this is how you prevent the blowouts. We are being proactive, y'all. We are being proactive. We're saying we're not going to, and now we're not playing from a position of scared either. We're not going, oh, I'm scared. Oh, God, what if the market keeps going? No, our positions are perfectly fine. It's just that we're saying, look, don't let pride blow you out. What's pride? Pride is refusing to make adjustments. It's okay to adjust. The mandate, your mandate is to have 0.1 theta. Don't feel bad about lowering your theta to get closer to that 0.1, because theta, ladies and gentlemen, is a measure of risk. It just is. The more theta you have, the more risk that you have on. And as long as I can keep 0.1 in the tank, I'm going to get the returns necessary to make mama happy. Well, I say that. Mama ain't never going to be happy. Don't be her. We're going this way. But we're going to, just make sure we size down a little bit. Because the worst thing you could do is go, well, screw this. I'm absolutely doing nothing. And then the market continues to go down, 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 down. And then now saying you got what was profitable is now unprofitable. There's no way we should ever let something that's over 50% profitable go unprofitable. Right? Well, Bobby, I thought your plan says that you can hold something until it's 28 days now. Yeah, I can hold it 28 days. But do I want to be that hero, or do I want to go ahead and ring the register a little early just to take a little bit of the pressure off? Let's see how, well, we didn't do it in that. Let's see, you could even go over here and say, okay, let's see what else we got. How's our stuff doing? Short groups. Hey, baby. Hey, da, baby. We got two here that are up. I'm up $72. Now, I lost $35 today. Well, Bobby, wait on it and you'll get that $35 back. Okay, hero. You do you, baby. Right? You do you. Be the hero. Let something go against you. Or just get out. $19. Let's put that in there. Then let's see where we're at. I think I'm going to stop after that. $36.60. We got out at $19. Just taking risk off the table.
Bobby, once you adjust to a point where you're satisfied and you were going to leave it as is, would you consider, given that it's an increased Wix day, would you consider swapping soon to expire or one of the open trades, but complete trade, meaning closing the puts and the put debit spread, and then reestablishing new trade at a much lower strike and establishing a new PDS as well to take advantage of the lower data of the higher Wix, I'm sorry.
Yeah, I don't think I would today. And it's just my call. Certainly, I understand what you're saying. For example, what Ed said, it's a good day to sell premium, right? It definitely is a good day to sell premium. There's no doubt about it. I could easily do that, but I feel like I'm just going based on what my theta is. I just don't need to. I don't think there's a need to do it today. But yeah, you certainly could. Right. And I'm more than comfortable leaving these put debit spreads on that we've got. But yeah, you certainly could. It's a good day to sell. I mean, I could close everything that's profitable, right? And just say, well, what I'm going to do is I'm going to be able to sell out much lower now. So this is a 36.75 here, right? 36.75. I just closed the 36.60. If I was repositioning today, where would I go? I'd go 57 days. And now it may be a little closer because I kind of like that 9 delta that you were talking about, right? But yeah, look, I mean, y'all, even with a 9 delta, where I've normally been doing about the 6, look how much farther away I could get. Maybe it's not a bad idea to keep closing, and then just reestablish some of them farther out.
I would also consider, if you're doing that, that's why I was asking, if once you're satisfied, so you're done, to reestablish, but also close the put debit spread to make sure that you get 1-for-1. Because if you just close the put the naked ones and reestablish, you're starting to lose data, because you're keeping the old negative data on and adding new ones. So just something because not all data is actually created equal if you really look into it. The one that you get initially and your trade is going positive, that's the one you want, that you would consider like real data. The one that you get today because the market is down, this is basically just your money that you paper losing, that it's now becoming data. So it's not getting a fresh data from a fresh trade. It's more valuable to me than the one that you got just because the VIX increased on your existing trade, if I'm explaining myself correctly.
Don't you just love this? I love this stuff. Let's do that. Let me close one more, and then I'm gonna roll something out. So I closed at 36.75 at 2025. 36.75 at 2025. 36. I can't even remember what that is. God, I must. Okay, 36.75, 2025. 36.75, 2025. 36.75 at 2025. Ringing the register, Bobby. All right. All right. So there we are. So we made only 12% on it, but that's fine. So I think what I'm going to do now in that case is I think I do want to roll something out, and let's do. Well, first of all, let's see what our theta is at now. So now we're at 49. So we have decreased that to 49. Oh, yeah. Look at that. Right? 0.14%. I kind of like that. I kind of like that a lot. And we've moved our buying power to, let's see, 8,200. So 8,000. See what that looks like. 8,000. And our deltas are 51. So that's 51 minus 10 is 41. Oh, yeah. Look at this, y'all. This is what's so great. 41. Look at this. Oh, that's beautiful. Look what we did. I mean, that's how you manage a portfolio. That's how you take risk off. That's how you ring the register. And certainly I don't have to put on a new trade, but I kind of like where I'm at, here, and go, well, I kind of like, we'll take advantage of the volatility. So let's go and let's do 57 days. Let's do that 9 delta. And let's get us a nice, the good thing is I don't really have to do 2 of them either if I don't want to here, right? At this 9 delta. I mean, look at the premium we're getting today. I'm getting what I would normally get on a 1-1-1. So I think I am going to be a little bit conservative. I'm just going to do a 1. All right, give me $20 on it. There we go. 3,600 at $20. 3,600 at $20. 3,600 at $20. We just did a little 1 lot, right? So we'll say naked put 49, puts naked 57, selling some premium, baby. I can't believe I got $20 for that. That is amazing. So then I think I will put on a put debit spread. All right, so let's see. Do we want the big one or do we want the regular one today? That's a good question. Let's go trade, table. So if we're going to do the big one, like we've been doing, I thought I was going to mix them up. I think I'm going to do one. I think I'm going to do a 50Y one today. I think I am going to mix those up a little bit. So go 57. I'm going to put vertical, beta wide, and see where we can get one at. 39.75, 40.25 is at 12. 975. So we did a 3950, 3900. 3950, 3900. 3950, 3900. Well, I don't want to buy where I bought, right? So I could go here, 3940, 3890 for 975. $39.40, $38.90. $39.40, $38.90, $38.90. And we got in that one for $9.75. I like it. Spending a little bit less on it. One PDS 49. Flex debit spread 57 days. 5/4/23. Beautiful. Okay. Now let's see what our final thing is that we did. So we put that in. We brought in 100. We did that. No big deal. Over here, we've got, over here, just see what we got. We got 7 naked positions. We've got 13 put debit spread positions. We've got 17 actual naked contracts and 21 contracts of put debit spreads. I kind of like that. Kind of like where I'm at here. All right. So that looks good. So let's get rid of all of our green stuff. So we just got our blank stuff. Now, so these are our open positions. Now look at this. Here's the cool thing. We don't have any nakeds, y'all, until 43 days now. Look at there. We have closed them all. And we've only got 243 naked positions. Everything else is at 57 days. And we've got plenty enough gas in the tank. Let's go back and get our Greeks and ratios for the final time. So now we are at 53 minus 10 is 4350. 4350. Good, Bobby. Good job out of you, young man. And our buying power is right at 84, 80, about 8,200. %. There we go. There we go. Looking good. Anyone got any questions, any comments? Would y'all handle things different? I mean, that's a good thing about our little community here, right? I mean, we can all do things differently, but I kind of like what I did. I added some naked. I added the naked, right? A little bit. And I added another put debit spread. And the ones that I closed, y'all, were at 43 days. So think about it. They each had a put debit spread with them. That now is unmatched. I mean, it's a put debit spread all by its little lonesome. Let's see if it made a difference in our little thing over here. Let's see, single symbol, portfolio beta weighted. See what we could do. Hide simulations. Let's see what our stuff looks like here. Take out our T-bills. Those glorious, glorious, glorious T-bills. We like them a lot. And today's the 4th. Oh, wow. We look really good. Look at this. So on a 12% pullback, we're down $6,000. That ain't bad. We're down like $12,000 on a 20% pull down. Let's see if we got all of our expirations here. Well, the problem is we've got 7 expirations, so this isn't going to show everything. Yeah, it doesn't really look good, does it? But at least I feel good about our, your tail risk is okay. Everything looks fine. Doesn't look like we're in danger of blowing up accounts. We took risk off. We claimed profits. Let's keep on going. Ken says, I woke up at 2 a.m. and closed 15 short puts and 5 short calls. There you go. And what a great thing to do. Your intuition whispered crash alert this month. And it very well could be. Very well could be. That's why I'm saying, y'all, we don't know when it comes. So let your mandate be keep your theta in check. The most important metric that you have is your theta. If you are above 0.1, you're okay. There's no way though that I'd be running this hot at 0.2 or 0.3 or anything like that. Slow your roll, keep it down. You can always add additional premium when things kind of calm down. This is not the time to be a hero. This is the time to keep your theta in check. Keep your theta in check. Questions?
Hey, Bobby, it's Dan. How
Hey,
you doing?
Dan. Good.
Good. Hey, I tried to model a Victor trade in Tastyworks, and
Uh-huh.
I'm getting an error in the risk analysis
Really?
feature, and I don't know if it's my computer or if it's the platform.
Well, do you want me to recreate it? Just tell me what to do.
It happens as soon as I try to put on a naked put and then go into the risk analysis to model it. I'm getting an exceptions error. So if you go out to the 43-day on the MES,
Okay, here I am.
yeah, 43-day, and then I did I don't know, about a 3750, or I think it was something around that 9%.
3750 is the long, right? 3750.
Well, I was just putting on the naked first. So
Oh.
if you want to short one of the 3750s,
Oh, short of 3750. There it is. Okay.
Yep. And then I went to the positions tab. It went to the cap requirements for the risk analysis. And then I hit the risk analysis itself tool. Yeah, see, yours is working fine. It's got to be my computer. I
Okay.
got the exception, error exception right there.
And we might have to bring Evan on. Evan's more well versed in this thing than I am.
Oh, I'm sorry. At the top, you have to hit the plus order legs in the upper right-hand quarter. Over one more.
Yeah,
Right there.
the issue that you're getting, Dan, happens to all of us, except for like, I think I've seen one person get it to work, but you get the, you get the
Yeah,
exception.
you got it as well.
crashes.
Okay,
It
I'm
just-
trying to
it
work
takes
with the
something,
technical guys
doesn't
to
work
find
out.
out what's going on. I was able to put a spy on like that, but I couldn't do the /MES. I don't know if it's something unique with us doing options futures, or what's the problem then. And then just one last comment from me, Bobby.
Yeah.
The other day we talked about the amount of buying power used on Tastyworks when it's an IRA versus a margin account. And I hear what you're saying, that trying to stay at 0.1 theta. If each of my positions is costing twice as much as what it is for a margin account, is it possible for me to get to 0.1 and still stay within the 30% of the buying power? Or would I have to ramp my buying power up to 60% in order to get to 0.1?
Well, it depends if it's different than what it is in Thinkorswim, and I would think they're close. I'm able to do it with an IRA in Thinkorswim. I would think you could do it at Tasty.
Tasty's charging 2 times span margin to
Hmm.
do an option on a future there. So
Yeah,
maybe it's just a limitation with Tasty. And
it may be. I mean,
Yeah.
if that's the case, if I couldn't keep it because they were using extra buying power, I would probably have to move back to Thinkorswim.
that's it for me today. Thank you, guys. I appreciate it.
Yeah. And I like what Ken, you probably will find exactly what I do. Ken and some of you, I know Trey and Ryan track it as well. Ken tracks Vega just to keep an eye on it, doesn't know what to do with it yet. Avi does it too. I was the same way. I used to measure it and go, oh God, I'll try to get it down. And finally, I just gave up with Vega. Maybe y'all can do a better job with Vega than I am. I just said, screw this. It's worrying me. Because I used to look at it. I used to look at my Vega and go, oh, how can I get that Vega down? And finally I said, I just can't get it down. So I quit looking at it. So if y'all are using theta Vega ratios and delta Vega ratios and Vega delta, whatever, that's fine too. I got it all in the spreadsheet. Y'all can unwhoop it and go at it. I think Eliza might do it too. Monitoring the Vega. I just found that I never could get it in line. It was the only Greek I couldn't get to behave. So I just quit monitoring my Vega. Data collecting. Yeah, there's nothing wrong with that. Because we sure enough got enough data, don't we? We got enough data. Let's see what our thing is saying here. We're saying that we're on track for 19% annual return. Should make a profit of $124. We've sold 7,300 in premium. We've got profits of 1,700 in profits. Staying in trade 41 days. Average credit per trade $66. Our win rate is 47%. Trade has a positive expectancy. Our naked puts were coming off at 56%, and we expect those debit spreads to be basically 100% losers. A lot of times these help us to hold on to these things, though. That's why, I'm not so concerned with that. That's kind of an expected thing. So I think our little account is doing good. How are we doing realized return wise? Well, we're having a temporary drawdown, right? We're up 2.16% on the year, where the market is up 5.73 with us. So, just holding on. Anyone else got anything? Okay, if not, I will see y'all tomorrow.